Our clients operate in a world of constant evolution. New technologies, innovations, and regulations interconnect our world, propelling us forward. At Forvis Mazars, we always look ahead. Listening to our clients' unique challenges and needs, we deliver audit and assurance, tax, advisory, and consulting solutions that are tailored and personal. We are a leading global professional services network with more than 40,000 professionals and a presence in more than 100 countries and territories. We combine scale, capacity, and coverage with agility, deep understanding, and an unmatched client experience. Built for our clients, people, communities, and society. Built to look forward, provide clarity, and build confidence. We are Forvis Mazars, built for what's next.
Good morning, everyone. My name is Adobe Osuji, and I am the Marketing and Communications Manager here at Office Bazaar in Nigeria. I'd like to first of all start by thanking you all for joining us for today's live discussion on the new tax reforms and the road ahead. Where does the gavel fall? All agree that this conversation is indeed a timely and necessary one. Um, as over the past year, much of the conversations have been around, the Nigerian New Tax Act have largely fallen on interpretation and anticipation. Now that we're in 2026, implementation has already begun. Uh, Attention has rightly shifted from theory to practice. And with that comes a new wave of questions and insights, obviously, about how these reforms will truly play out in the business environment. Across sectors, there's been growing interest in understanding how specific positions of the 2025 Nigerian Tax Act will be applied and where the additional clarity from regulators may be needed. At Forvis Bazaar, our role as advisors is essentially to bring clarity to this complexity, helping businesses interpret these changes, anticipate potential impacts, and adapt with confidence. Today's discussion, we bring together our tax experts to unpack key areas of the new Tax Act, highlighting provisions where further guidance may be expected, and sharing perspectives on, that can possibly help you to evolve and manage the navigations of this landscape. So I encourage you to stay engaged throughout these conversations. Drop your comments or your questions in the comments and make the most of the opportunity to hear directly from our professionals. So thank you once again for joining us. It's now my pleasure to hand over to Peter Amofia, who is a partner in our Tax and Regulatory Services unit, who will introduce our speakers and set the conversations for today. Thank you.
All right, thank you so much, Adobe, for that warm opening remarks. I want to join in saying thank you to everyone and good morning to everyone who joined us today as we discuss the new tax reforms or the new tax laws, which are all effective already as of today. And to do this conversation with me, I'm not the president, but I know the president will say my fellow compatriots. So I have my compatriots and who are professional tax experts who will be having this conversation with me. I have Ajibola Shugro, who is a partner in our tax and regulatory service line. I have Olayinka Orelaja. I have Oluwatobi Olafaju. I have Olamide Suleiman. And then beside me is Olayinka Adedeji. And today, the conversation is different from what you may have heard. As some of you may know, when the new tax laws were released or when the new tax laws were signed, there were provisions in the new tax laws that had to do with that had uncertain treatment. And when you embark on a reform like this, which entails overhauling the whole tax system, usually there are gaps that you expect. And what do you do when you expect these gaps? What you do is simply to say that on these provisions, on these sections, there will be further guidelines and circulars from the tax authority or relevant tax authority who would be able to explain in clearer terms and in practical terms how these sections can be implemented. For some of us, I think we are worried that these guidelines should have been out a long time,
Absolutely.
especially if you remember that the Joint Revenue Board Establishment Act, the Nigeria Revenue Service Establishment Act, were already effective as of last year. So we felt they had ample time to prepare and release circulars. But I also think that it is not an easy one on them, especially if you have to imagine that if you put the gavel this way, it may have unintended consequences. So today, what we want to do as tax consultants is to discuss, to help you estimate or anticipate where the gavel will fall. For some of these provisions, the circulars and guidelines are expected. Where would the gavel fall? Will the tax authority eventually settle for an option which you may have not anticipated? Remember, the implementation is ongoing. The ship has sailed, like Adobe said. So you do not have enough time to start. You don't have enough time when the circulars come out to start implementing your compliance strategy. So the essence of this session is to help you anticipate the options, and when the options go this way, what does it mean for you, and how can you prepare should the option go that way? And I probably may just dive into it since I'm already through the mic. So for me, one of the important reforms that we have seen in the tax law is when you look at Section 155 of the Nigeria Tax Act. Section 155 of the Nigerian Tax Act deals with VAT refund. I remember attending one of the stakeholder sessions when the chairman of the Presidential Fiscal Policy and Tax Reforms Committee mentioned that throughout his practice as a consultant, he was unable to get the tax refund for any taxpayer. And this speaks to the transparency, fairness, and trust in our tax system. So I think what he has done, or what the committee has done, is to build back the trust, to bring in transparency. Transparency is when we say we will do this, we will do this.
Yeah.
And what he has done is to say, in section 155, if a taxpayer has an impute VAT, which the taxpayer is unable to claim as a result of not having enough output VAT,
Yeah.
the taxpayer should apply for refund provided the refund is done within 12 months of the transaction date. Once the taxpayer applies for refund, the taxpayer would get that refund within 30 days. Again, in the old tax law, in the Value Added Tax Act, there wasn't such a very specific timeline. So now we have a specific timeline that I said 30 days. But again, because the drafters of the law anticipate that sometimes this refund mechanism may not be as efficient as designed, it has come in to say if you do not get a refund within 30 days, you should be able to offset other taxes using that impute credit. Now, for us, we are worried about how would the implementation of this Section 155 be done, especially when it has to do with uh, especially when it has to do with offsetting other taxes. Would it be system driven the way you have your withholding tax in the tax pro max? So you simply click use withholding tax and then you wipe off your CIT. Would that be automatic as that? Or would you have to write and apply to the tax authority to say, I have an impute VAT credit, which I intend to use to offset maybe my CIT. We need guidelines. I hope the guidelines, when it comes out, will address this issue. And these are the two options. And for me, it may have a lot of consequences, especially if there's inefficiency in if the tax authority decides to go for the manual approach.
Yeah, thank you very much, Peter. So another aspect where clarification is needed is when it comes to transitioning from the VAT Act to the Nigerian tax act. And this is important because we have some companies that have outstanding input VAT credits under the old tax system. And now that we have the new tax system, these companies are now looking forward to getting a refund under the new system. And based on the fact that some of them may not have enough output VAT to be used in offsetting this input VAT. Some may have output VAT, but maybe it's not enough to clear off the outstanding input VAT. So when we go to the provision of the NCAA regarding the VAT refund, we will see that we have the 12 months application period. That is, we have to apply within 12 months after the transaction giving rise to the refund has occurred. So looking at this kind of entities, some of them have carried out the transaction over the years. So for them, this 12 months period would have elapsed.
You're talking about years before
Yes,
the
yes,
January 2022.
exactly. So before we even commence the task, the 12 months have elapsed. So for these companies, how will they be able to get the refund? We need more clarity as to how to go about it, because if clarity is not provided, they won't have enough information or enough guidance on how to proceed. And does that mean that they will now forfeit all their input fees?
Yeah, I mean, I agree with you because at the end of the day, all of these questions we've asked around VAT would basically be answered by a guideline. And very importantly, the ones you mentioned, that transitioning from the old law to the new law, right? It's very important because, I mean, if you're telling me that I cannot claim my I can't get my refunds based on the old law, maybe because of the 12 months that has been specified in NTA, then it's sort of an injustice. So I would appreciate that we get that guidelines. It would really, really help a lot of taxpayers accurately prepare and plan their transactions, obviously, into the new law.
Thank you very much, Toby. So another thing we need to consider is the provisions of the minimum effective tax rates. If you go to section 57 of the Nigerian Tax Act, they have provided that for companies, certain companies, that their effective tax rate is not up to 15%. They have to pay top-up tax to make up their effective tax rate to the 15%. Though this provision will not apply to all companies, it will only apply to companies that are two categories of companies. First, companies that are constituent members of MMA groups with at least group turnover of 750 million euro or pounds, as the case may be, or any other company with gross turnover of 50 billion naira. So the first thing is that for these other companies with gross turnover of 50 billion naira, how are we to go about this in terms of companies that have income tax exemption? Let's take agricultural companies for example. Agricultural companies have, for those that are into crop production and other set of agricultural companies, they have exemption for the first 5 years of their operation. So these companies are granted income tax exemption, which means that they will not pay tax at all for those periods. So if for any of the first 5 years, for any year, they have gross turnover that is above 50 billion, the provision of the META will need still apply to them, given that it is not clear, that area of the law is not clear. So are we saying that the provision will apply to them? What do you think about that?
I mean, that's a very interesting perspective because, I mean, a lot of people would have not thought about it this way. It's a very interesting perspective, which guidelines would actually accept because, interestingly, as you said it just brings me back to how I interpreted the law when I read it. You know, when I read it and I got to that other part, my interpretation was simply once I cross 50 billion naira, it means I'm a very big, stable company and I do not need that exemption. So it means that whatever exemption I might have been exposed to in any other part of the law, I might just forfeit it basically because I need to make sure that I contribute that 15%. But this that you mentioned is very, very, very valid. And I think guidelines would
Yes.
really do a long way to assist us.
Yes, exactly. Then another aspect of that same METR is regarding free trade zone. So if you check subsection 3 of that same 57 of the NCA, it's actually exempts free zones from the provisions of META. So provided that they are not selling to the custom territory or where they are members of MNE. So if they are members of MNE group, automatically they have to comply with the provisions of the METR. But where they sell to the custom territory, With this aspect actually needs some form of clarification, because if you go to the second schedule to the NCA, we'll see that full exemptions are granted to free zone entities where they sell less than 24, where their total sales is less than 25%
To the custom
to the
territory.
custom territory. So for this entity, they've sold to the custom territory and it's less than 25%. Will they still comply with the provisions of the NCA?
I think you're asking if the sales to the custom territory go within or below 25% of the
Yes,
total sales
of the
of
total
the
sales.
of the fusion enterprise.
Yes.
However, the sales in terms of naira value is above 50
50
billion.
billion naira.
Would that sort of company be interesting?
Yes.
Yeah. So I think enterprises operating in the free zone, they have this exemption where they are not supposed to pay tax, except if the sales from the custom territory exceed 25%. So I would think that before an enterprise in the free zone can be subject to METR, then the sales from the custom territory must have exceeded 25%. But then, like you said, we would still expect clarity from the tax authority on whether we have to go by the threshold of 25%, or regardless of the amount, then we would just have to wait for the guideline that would be released by the tax authority.
Yeah.
I wish the tax authority is able to find a middle ground between
Yeah.
having 25%
Mm-hmm.
and 50 billion.
Yeah.
Mm.
For me, what might be fairness, in my opinion, is if you sell below 25%,
Okay.
but then your sales is above 50 billion,
Yeah.
I would still allow you to have the income tax exemption just because your sales, your ratio, the ratio of the sales to the customs directly is still below 25%. However, where would the gavel fall? Nobody knows, but I think it's important that taxpayers are anticipating this and are making plans to comply adequately.
Thank you, Peter. I think under that same provision, right, it says that if you sell to the custom territory
Mm-hmm.
and still within 25%,
Yeah.
then you'll be taxable.
Yeah.
Once it exceeds that threshold,
Yeah.
you become taxable, right? But one thing we are not taking cognizance of is the revenue threshold. It says gross turnover.
Okay.
Does that mean that the export sales have to be inclusive or only the sales are made to the custom territory?
Okay. Yeah.
Okay. You mean for application of METR?
Mm-hmm.
Yes.
Well, for me, if I'm to look at it, one thing I noticed that we've not actually factored into this conversation is the fact that the intention of the drafter of the law, as time goes on, that in no distant time, these particular enterprises operating within the zones,
Mm-hmm.
irrespective of the quantum of their sales to the custom territories, they will definitely become taxable. So there's a possibility that that particular subsection in section 57, they didn't take cognizance of some of these provisions. So they left it open-ended.
Mm-hmm.
And that is why the circular or maybe the public notice from the Nigerian Revenue Service will now provide clarity. But unfortunately, it's not supposed to be so, since one of the objective of the law is basically to simplify the tax, which should have been clear for everyone to understand.
Thank you very much, Adibola. So another point on the METR. So for the METR, if you go to that section 57, it's actually provided like an approach on how to compute the effective tax rate. So it says that the covered taxes as a proportion of your net income. And what are the covered taxes? They are your income tax, your development levy, hydrocarbon tax where applicable, and every other taxes. Then what is the net income? Net income is your profits before tax in your audited financial statements. Then if you have any unrealized gains or loss, you exclude them. Frank investment income, you exclude them. So looking at this approach is focused towards companies that generate profits. So how about companies that reported loss in any year of assessment? How are we to compute their effective tax rates? Are we going to say that, okay, because they reported loss for this year and they don't have any tax to pay, automatically that means the effective tax rate should be 0%? Then if the effective tax rate is 0%, does that mean that they will pay a top up of 15%? Okay, if that is the case, this 15%, on what are we applying the 15%? Are we to apply it on the net income Or okay, if you're applying this on the net income, how do we get the net income? Don't forget the reported loss. How are we to get the net income? So this kind of area, there are aspects where we need more clarifications.
Very important aspect, Olayinka. So minimum tax has been deleted from the Nigerian tax act. So I would expect that any company reporting loss for the year should not have to pay anything as tax. But then considering the fact that you mentioned that to determine the net income, we have to make adjustments for franked investment income and unrealized exchange differences. There are times whereby companies would report loss as a result of unrealized foreign exchange loss. In a situation where we de-recognize that unrealized exchange loss and we arrive at a positive figure, I think the METR can then come in. Yeah, so but these are areas that we may still need clarifications on, really.
The METR,
Yeah.
while we are Nigeria is not a signatory to Pillar 1, Pillar 2,
Mm-hmm.
the METR is just a variation of Pillar 2.
Mm-hmm.
Yeah.
And I
Yeah.
think Pillar 2 wasn't there to punish people or taxpayers. Actually, it is there to correct situations where there is profit shifting and tax evasion. Now, the Nigerian tax authority could be placed in a dilemma because the dilemma would be if we say that these entities have made losses and they are subsidiaries of an or components or constituent entities of an MNE,
Yeah.
where we might take the risk because if we
Mm-hmm.
do not take the tax, the parent company
Mm-hmm.
of that MNE
Mm-hmm.
could take the tax if the parent company decides to comply with Pillar 2. But again, there has to be a balance because there has to be fairness and it also has to be a way to safeguard the revenue that should be due to Nigeria.
Yeah, so at the end of the day, I mean, the guidelines will just still be
Yeah.
the hope to ensure that there's that balance, there's that clarity, and everybody just understands what is expected of them.
Yeah.
I think. Yeah.
Similar to the METR that Olayinka just talked about, is when you look at section 6 of the Nigerian Tax Act, particularly subsection 3, you discover that it talks about how the subsidiary of a Nigerian parent company will be taxed, particularly where it operates in other countries other than Nigeria. Now, in that case, the METR provides 15% and made reference to the minimum effective tax rate as specified in the Act.
Mm.
For me, if that provision as stated as specified in the provisions or in the underlying provision, then I would have just assumed that it's 15%. But because the key word there is as provided in the Act, so the understanding should be that it should be interpreted in relation to Section 57. Because
Yeah.
anything around minimum effective tax rates are only defined under two provisions, Section 57 and Section 6 of the Nigerian Tax Act. So for a subsidiary and a foreign subsidiary that operates outside Nigeria, where the Nigerian parents has element of control. Now, for that METR to be applicable, the provisions in Section 57 has to be considered. One, from the perspective of the turnover, then two, of course, the profit analysis in terms of the net income and what have you. I don't want to believe that it will just be that 15% without making reference to Section 57. But we hope that maybe by the time the NRS releases the guideline, we'll be able to understand where the Gavel falls at the end of the day. I don't know if anybody has maybe like a contrary, another perspective to it.
Thank you, Jibola. So I want to believe that Section 6 of the Nigerian Tax Act, subsection 3, is a standing provision.
Okay.
Because the logic behind it, I want to believe the logic behind it is to prevent Nigerian parent company from situating their subsidiaries in low tax jurisdiction or tax havens. Because that section does not make reference to Section 57, rather it says the minimum rate prescribed in the Act, and that is the 15%. So the idea might be that if you have foreign subsidiary, right, in any tax haven or low tax jurisdiction, you as a Nigerian parent company, you have to make up a balance regardless of your revenue threshold because that section was not referenced. And I mean, if you also look at the subsection 4 of the Act as well, it says that the Nigerian Revenue Service is expected to issue a guideline as to how this provision is to be implemented. So I believe it's a separate application.
So could it be that the intention is to probably in the future get Nigeria ready for signing into the Pillar 2 structure that Peter mentioned, such that um, I mean, I'm just trying to marry everything together, such that the Nigerian parent company, discouraged from situating its subsidiary in a low tax jurisdiction, is not going to structure a system so that taxes is lose we lose those tax revenue through the Nigerian parent entity, right? I think you get what I'm saying. So
Yeah.
maybe it could be that Nigeria is just trying to be in line to structure its tax system ready for being signed into the Pillar 2, Pillar 1, Pillar 2 solution.
Maybe another thing to add is this. Section 57 of the NTA, the focus is on revenue.
Yeah.
Okay.
And when you look at a constituent entity of a multinational enterprise, it's looking at the consolidated revenue. Now, in the case of a foreign subsidiary of a Nigerian parent,
Mhm.
That's a
if
truth foreign
exactly,
Yes.
if you clearly look at what the interpretation was meant for a constituent entity of an MNE, that automatically means that for a Nigeria parent entity, that same revenue threshold should be applicable because you are not assessing the foreign controlled entity
Mm.
from the perspective of its operation when it comes to minimum effective tax rate.
Mm.
It's from the perspective of the revenue of the parent.
Okay.
Because if we are to situate what is obtainable in the case of the MNE to that of the Nigerian parent, you discover that, but let's just hold on and just believe that the circular will provide clarity.
Mhm.
So I think it's very important the secular comes.
Yeah.
And as it said, the taste of the food will be in the eating, right?
Mhm.
The secular should know that it is now being put under strict scrutiny because MTR has to do a lot with foreign companies, right?
Yeah, yeah,
Or M&E group.
many
And
groups. Yeah.
as you're seeking investment from foreign direct investment into your country, remember capital goes to wherever it is better appreciated.
Mhm.
Nobody is going to come here if you don't appreciate the capital well. So it's important that this circular addresses the concern of that provision in a holistic way. If two experts are having different opinions and thinking differently about it, then it's important that we do not issue circulars that are short-sighted. So we can take all the time and do it, but while we're taking all the time, we should close
Oh, God.
the
Yeah.
extension
Very
of it.
important.
Mhm.
So,
Very well said, Peter. Another interesting part that I want us to discuss is the rent relief allowance.
right.
So, like we all know, the consolidated relief allowance has been taken out. So we now have the rent relief allowance, which is to be claimed at 20% of your actual rent, subject to a maximum of 500,000 naira. So the Act provides that the rent relief should be claimed accurately, such that you do not claim more than what you actually pay. But then it also states that there are other informations that would be requested by the tax authority, but up until now, we do not have clarity on that. So are taxpayers expected to wait for the other informations that would be requested by the tax authority before they factor the rent relief into consideration, considering the fact that payroll cycles are already ongoing? Some people have even collected salary for the month already. So will it be right to consider the rent relief allowance in your payroll for the month of January, or do we have to wait for clarifications that will be released by the tax authority?
Maybe I need to throw in this. Yesterday, I hope you don't mind, right? So I got a message from my wife, and then she said, "Oh, Peter, well, she didn't say Peter, she said, okay." But then I got a message, and then she said, "What's this rent relief allowance? I've been asked to fill in this link, and she's supposed to
Okay.
upload some documents.
Okay.
Can I share those documents?" And then I go, "Okay, please share the link with me so I know whether it's coming from LIRS, because I've seen
Mhm.
LIRS issue some public notices. So I was wondering if one has come out, and then I missed out on it. So when she shared the link, I looked at it. Okay, this link is from your company, it's a Google link. I guess they're probably planning ahead
Mm-hmm.
to collect information from people. But then, Olamide, we're having a conversation. You said you have people who are already claiming rent relief,
Rent
right?
relief.
Even without waiting to pay. Can you guide me how they're claiming?
You know, many companies now they pay their salary, right? You even click capital thousand naira flats.
Really?
Oh, wow. Yeah.
And if you look at the provision of the law, it says that you have to provide the rental amount, that is the rental
The rent,
receipt,
okay,
as well as any other information that may be required or that may be prescribed
by the
by the tax authority.
yeah.
But this is where we are. There is no circular, and at the same time, could it be that part of the information that may even be required by the tax authority includes the landlord tax ID? In fact, to be frank with you, Peter, some landlords are even aware of this provision,
Mm-hmm.
and they are aware that the logic behind it is to bring them into the tax net. They are not ready to release their tax ID. Right? So what could be the implication for the taxpayer that has actually incurred this rent?
Mm-hmm.
But at the same time, because of part of the information required by the tax authority includes the taxpayer, the landlord taxpayer ID,
Mm-hmm.
and this was not given. So what could be the
The
implication for
implication, right?
For me, let me even try to ask because some things are very, very urgent as much as we're waiting for guidelines.
Mm-hmm.
For instance, the issue of rent relief allowance, salaries have been paid by lot of companies,
Yeah.
salaries will be paid at, I'm thinking over 80% of companies will pay salary by this weekend.
Yeah.
Yeah.
So by the time the salaries are paid,
Mm.
then some companies decide to unilaterally grant rent relief allowance to their employees on the basis that they have provided some information, whether adequate or not. You can only test adequacy against the standard.
Yeah.
Mm-hmm.
And because you do not have a circular, there is no standard. So whatever they do, would that be justified? And if this delay continues, how long would it continue and it becomes just justifiable?
Mm-hmm.
For instance, do we try to say, after all, the do we use the standard of 30 days? 30 days in the sense that that is the period of time you have to
Respond.
respond to an objection.
Objection.
Yeah.
So if you respond to an objection in 30 days, you've done the right thing. So it's 30 days after the implementation date a good time to just wait for the tax authority? Or is it even a good time to implement unilaterally since you've not gotten a guideline
Deadline,
from
yeah.
day one?
Mm-hmm.
Another person could say, oh, the new tax law has said if I make an objection, a valid objection, and you do not have the tax authority respond within 90 days,
Mm-hmm.
after 90 days, it is assumed
Become
that the tax authority, you should
so,
assume that the
yeah.
tax authority has
That's
accepted,
Prepared, yeah.
and that is an introduction in the new tax law.
Mm-hmm.
So after, do we also assume that if we do not get a circular by,
See this.
by 90 days,
Today's,
which is 30th of March,
yeah.
whatever people have done, they cannot be punished for it.
Mm. That's an interesting angle, and I think I mean it would if anybody decides to run with that,
Mm-hmm.
the person has some basis of justification in the law. The way I would interpret it.
Yeah, another thing I want us to also discuss is how the rent relief will be claimed. Will it be on preceding year basis such that 2025 rents will be claimed in year 2026? If we consider the way premium on life assurance is claimed on preceding year basis, or will it be on actual year basis such that I have to wait until I pay my rent for year 2026 before I can claim it? What do we think?
For me, for me, if I'm to carefully analyze it, I think it should be on actual year basis. And the intention of the law was actually actual year basis. So how will it work? Those are some of the questions that
Mm-hmm.
we are hoping that the tax authority will answer. Unfortunately, recently, I think one of the state internal revenue service released so many circulars, but the part of the rent relief allowance was never released. So I guess they did that on purpose. Maybe they wanted people to fall into their traps, or I wouldn't know. But I think it would also be wrong if we just leave this open for too
Mm-hmm.
long and then don't have this relief claim in such a way that people will have to pay heavily and just wait until when circulars are released before they now start enjoying those reliefs.
Just to try to question a bit your opinion that the Gavel may fall on the side of actual year business.
Mm-hmm.
So actual year business, you actually what you're saying is um, only for persons who have paid rent in 2026, because after the commencement date of the act,
Mm-hmm.
only such rent can be used to relieve a tax payable, personal income tax payable, correct?
Yes, exactly.
You know what that would most likely mean is that if my due date for paying rent is January, let me say that's probably the earliest you can do in
Yeah.
2026. So on January 1st, I've paid rent
Okay.
in 2026.
Mm-hmm.
It would then mean that I can only claim a rent relief in 2027, or maybe not 20. Okay, I can actually claim
Let me.
this
Yeah,
year.
exactly.
2026.
Okay,
This year.
so I
Mm.
just have to pay, claim, divided by
By
12.
12.
Okay,
Yeah.
Yeah, but another thing to consider is if the guideline would actually go with the actual year basis.
Mm-hmm.
So for those, your example, you use 1st of January.
Mhm.
So what of those that they pay maybe August,
okay. So
December?
overlapping
Yeah,
Exactly. So
overlapping
if
period.
period.
if someone has paid rent in August 2025, and then the law says actual year basis, so you need to have paid in 2026 for you to claim in 2026. So how would that be applied? In fact, even considering most tenants
Yeah.
pay, well, don't let me say most,
Right.
they pay rent in advance.
Well, you
So
Yes.
Olayinka, the answer is very simple.
okay.
Now, the relief is applicable to 2026.
Yes.
Let's forget about when the payment was made.
Okay.
Let's assume you paid in 2025, as you've rightly mentioned.
Yeah.
You paid in August, your rent runs from August to July.
Yeah.
In 2026, you have about 5 months or 7 months.
7 months.
Mm-hmm.
The assumption, maybe not to make an assumption,
Yeah.
you will equally pay in 2026 that
Yeah.
will run
Yeah.
2027.
2027.
We are basically focusing on 12 months, and the 12 months should be easily established. As long as you can establish, I think you just go ahead and enjoy that relief.
Sorry, but let me steer this a little bit. Remember that the relief I'm trying to get is on the income I have made in 2026.
Mm-hmm.
If I have paid a rent in 2025, right, and I
Yeah.
can't get that relief on my income that relates to the rent of 2026, isn't that a bit unfair on my part? Because I will just be assessed to tax on the entire income
Mm-hmm.
and no relief on the very vital thing that the tax drafters has also considered. So I feel like it's a very, very important thing that needs to really be addressed.
The concerns the tax or challenge the tax authority might face, not just tax authority, I think even the taxpayers who would want to claim the relief, is if they decide to say the relief will be granted on preceding year basis.
Okay.
So it means the rent you paid in 2025
Mm-hmm.
can be granted as a
2026.
relief in
2026.
2026.
Yeah.
Remember, there is also the requirement to provide certain details and information.
Mm-hmm.
Mm,
You may be hindered or constrained from enjoying the relief just because you are unable to provide those details.
mm,
And the reason being that maybe the way I've had my relationship or tenant landlord relationship in the past is, oh, I pay rent, I send it to him in WhatsApp, pay. You
Yeah.
don't even have a contract with the landlord. But now the law is saying you have to present a contract. But the guideline now says present a contract, present a rent receipt, present the landlord's taxpayer ID. I don't even know the landlord. I'm probably talking to the agent.
the agent.
You see that you would be hindered from enjoying the relief.
Yeah.
So would the tax authority consider this challenge while issuing the guideline and
Mm,
say, now we are starting on a fresh note.
No. Yeah.
Everybody, this is our standard
Mm-hmm.
and it is effective for rents that are concluded or transactions or rents that are contracted
Mm-hmm.
from 2026.
26.
mm. Yeah,
Not sure.
yeah, true, true. That's very vital. So also one more thing that comes to mind, the law has a provision where it says that where a company is controlled by not more than 5%
Mm-hmm.
and profit is not distributed, you know, it could be assumed that the profit is distributed to those 5% and then they will get taxed, where it's not detrimental to the business. I mean, when I read it, I was thrown aback because I wanted to understand what detrimental is because it's a very subjective word.
Yeah.
What could be detrimental to me and my business
Mhm.
would mean nothing to you and your business. So who determines this level of detriment? And I would expect that by now such guidelines should be released. And one of the reasons is because if you see the structure of a lot of uh, businesses or a lot of limited liability companies, so to say, in the country, a lot of them are maybe if two friends come together, family based, and all of that. So a lot of people will be captured under that structure. If I would have enjoyed a relief, maybe because my revenue is below the 100 million naira threshold
Mhm.
as a limited company, I, as the shareholder, as the owner of that company, who manages the company, where the tax authority now feels like
Mhm.
I've reviewed your financial statement. I don't think sharing a profit will be detrimental to you. Okay, you, Mr. Shareholder, come and pay this tax and then report me to LRS. It's going to cause a bit of stir. And I mean, what do we think about that? Because it's a bit confusing too.
Lindsay, you probably, but then let me try to make sense of the rationale underpinning that section. Obviously, it's not a new section, it's always been there.
Mm,
But what we felt is that since we're having a new set of laws, that this section, the definition of detrimental or conditions or factors or signs of what could be detrimental to a business if it shares dividend or shares profit as dividend would have been stated in the tax law. And probably
mm.
that's why we need a kind of the circular now. But let me look at why they have chosen just five. How many persons?
Five,
Seven.
not more than
Five,
five
not more than
percent.
I,
5. Yeah.
I think it's if you have lesser shareholders, like five and below,
Mhm.
the possibility of creating an artificial arrangement is more probable.
Mhm.
Mm,
It's very probable. So if we have five people, we could say we don't want to share profits because if we share profits, we will pay dividend tax.
Mhm.
Tax. But if you're a PLC, you have lots of subscribers. Where would you get all the shareholders who
Mhm.
have that
mm,
uniform view?
Yeah.
So they have assumed that when you have more shareholders, because I've always wondered why not more shareholders? Why
yeah.
the choice of five and
5. Yeah.
Mm,
when they have more shareholders now, I think the assumption is the decision to share profit will be more of economic reasons
reason.
than just
Mhm.
tax avoidance or tax evasion.
Mm,
Yeah, but
yeah.
I don't know if anybody wants to speak to.
Yeah.
Something else.
So to that, if you also look, like I just mentioned, that provision is not a new provision, has always been in the tax law,
Mhm.
right? And that if you also remember the case of RMD versus FRS, that is the Rand Marshall Bank
Mhm.
versus FRS. So in their own case, their own position was that their own intention not to distribute profits was not to evade tax, not to avoid tax. And the TAT ruled in favor of FRS in that case, stating that the law does not provide that the intention has to be for tax evasion or tax avoidance.
Mhm.
This same provision, the what we call the Rand Marshall Bank, also moved to the higher court before the federal high court.
Mhm.
And the federal high court ruled that so far the intention is not to evade tax, neither to do
Avoid.
tax evasion,
Mhm.
then definitely that provision should not be applied.
Right.
It can only be applied where there is intention to evade tax or tax what we call tax avoidance.
I think even taxpayers hinge on, after all, the tax authority has come up with, sorry, the new tax law has come up with the requirement to register tax planning. So if I
Yeah.
have not
Mhm.
registered a tax plan,
Mhm.
would it be assumed that I do not have tax planning intent?
Mhm.
So if this case goes to the tax appeal tribunal, could
Yeah.
someone say, I have not registered a tax planning? And that's
Mhm.
even why I didn't.
Right.
So
Notify the
there's-
tax authority.
therefore, my intentions were genuine. I
Mhm.
wanted to plow back this profit in the business, and all of that. But it's really okay
Mhm.
that whatever the circular says, is not too stringent
Mm,
on
Yeah.
the taxpayer. And the reason is because the cost of capital is huge.
Yeah.
yeah.
If people are plowing back these profits
Profits
into
not
their
to business.
business,
Yeah.
we should allow them.
Mhm.
We're in an inflationary economy, even though deflation is coming down.
Yeah.
Go to the bank to get loans today.
The
The
interest rate is
interest
high.
rates. Yeah.
So if people decide to plow back those profits and not distribute them as dividends, we should kind of encourage them. So the tax authority, I think they should be mindful while releasing the circular and guidelines
Mhm.
to ensure that they do not unintentionally box companies in situations where they
Yeah,
are
first
running
year.
out of capital.
Yeah, true.
I think for me, well, I'm not looking at either ways. One thing just came to my mind as Toby was speaking, and that has to do with that word detrimental or
Mhm.
detriment. Unfortunately, there's nowhere in the tax law that that word
Was defined.
was defined. And the issue will be irrespective of the interpretation of the circular, as long as it doesn't favor the taxpayer.
Mhm.
I see the possibility of some of these things being challenged. When you look at
Favor in quotes.
Yeah.
I think some taxpayers want to pay tax. Maybe
tax, so favor in quote, because when you look at the case cited by Olamide, the issue there wasn't about that detriment. It was just about the intention
Yes.
behind why the profit was distributed. So, but let's wait and hope that the government falls on a side, on a part that's favorable to both parties. Maybe I
Yeah.
should just use it that way.
Yeah.
Thank you for that, Ajibola, and thank you for your contribution. So another important aspect which we feel like there also been a lot of controversy around it is the filing of 2025 accounts.
Okay.
A lot of taxpayers now they are about to file, they have even finalized their accounts and they are about to file. But there is this uncertainty as to what should be the applicable law. Should it be based on the Company Income Tax Act, which was the law that was in effect when these transactions were carried out, or it should be based on the Nigerian Tax Act, looking at the fact that the Nigerian Tax Act has now repealed
Yeah.
Company Income Tax Act. And the reason for this uncertainty can also be traced back to what happened when the Finance Act 2019. So when the Finance Act 2019 was implemented, it was applied retroactively,
Yeah.
right? And that was brought about the case of Akuga versus FIRS. And they challenged this position that you don't apply the law retroactively
Mhm.
except where it is expressly stated,
Stated.
right? And there's a popular law maxim that says that the law looks forward, not backward.
Good.
So the applicable law as at that time, or the time the transaction was carried out, was CETA. If the Nigerian Revenue Service feels that it should be the, looking at the fact that they want to be the implementation gap, feel that it should be the Nigerian tax, what could be possible implication? I mean, it may be beneficial to some companies, and at the same time, you can have adverse impact on other companies. Let's take, for example, the small company definition, right? If the law were to be applied retroactively,
Mhm.
a lot of companies that fall within that small company definition will not pay tax for 2025.
Yeah.
And that means that their CIT rate will be at 0%.
Mhm.
Why this will be beneficial to them, we also need to look at other provision. Take, for example, the minimum effective tax rate, which is top of tax of 15%. So it is beneficial to one taxpayer. At the other end, it is not beneficial to another taxpayer. We also have the CFC rule there, that is the control foreign company rules there. So these are some of the areas where the taxpayer feel like, no, these things are not clear enough. And looking at what has happened in Finance Act 2019, there should be a guideline. And I can't wait indefinitely for the tax authority to release the guideline. If there is no law now at this moment, then I proceed to farmer accounts. What do you think will be the possible implication for me if the FRS or the Nigerian Revenue Service rather say something of the or release a guideline that says I should run the new provision?
Mm. So,
Okay, so if you ask me, I think it should be the repealed CIT Act because this is the act that was in effect while the transactions were carried out. We are referring to year 2025 transactions now. In year 2025, there was nothing like the Nigerian Tax Act being in effect. There was no NTA being in effect. And taxpayers carried out their businesses in year 2025 in line with the applicable tax laws. If you look at it from the angle of expense deductibility, CETA has 4 criteria. The new Nigerian Tax Act has just 2 criteria. Reasonability has been deleted and necessity has been deleted. Some expenses were incurred in year 2025 as a result of necessity. So if we are to go by the Nigerian Tax Act, what happens to this category of expenses? But then we just have to wait for clarifications on the applicable tax law for year 2025 financial year accounts.
and to add to that again, which is just like a fallout of what you just said, is that in preparing or planning out 2025, some companies, would also prepare management reports.
Mhm.
They will prepare quarterly reports and the like. Those information is what they use to plan out other activities all through the year, right? They would have relied solely on the provisions that had been repealed, CETA and the likes. It would almost be ideal for those type of companies to file that account using that same CETA.
Correct.
Now, let's assume they've gone ahead to file CETA based on provisions of CETA. And 2 years down the line, FIRS come. Assumption again, guideline says use NTA. And then an audit comes during that year. What law would be used to audit that at point in time?
I expect the NRS or the relevant state internal revenue service to actually use the law that was effective during the period the transaction was consummated. But I think we've had a lot of fun. Let's see if we have people outside there. They're talking to us. Let's feel what they're saying.
Yeah.
Everything.
Okay, so let's see what we have in here. Okay, thank you. Someone said we're having a very super informative section. Then someone is asking that in view, okay, someone is asking even if the actual year basis is feasible, how about the rent paid in 2025 to roll over in 2026 or paid in 2026 to roll over in 2027?
Thank you.
We had discussed we had sort of discussed that um at some point. Someone is also trying to ask that in view of the timing of the payments, I'm not saying of the payments, should not affect taxpayers' eligibility to enjoy the rent relief. Okay, in my view, the timing of the payment should not affect taxpayers' eligibility. Well, I mean that's somebody's opinion.
Yeah, that's authority speaking.
I'm sure this person is really, really interested in enjoying the tax relief. And let's even be very, very fair with ourselves. Yeah, I think this rent relief is a very vital thing to look at.
Yeah.
And why am I saying this? If I am not in a paid employment, the only relief I would most likely enjoy, right, by the new act is rent relief, no matter how little it is. That's the only relief I would most likely enjoy because I'm not in a paid employment. I certainly would not even pay attention to NHF, NHIS, probably pensions. I might not. Then I'm paying rent because obviously I've not taken up any loan to develop a owner occupied residence. So the only thing available to me would be that rent relief. So a lot of people would really, really want to take that without joke, no matter how little it is. And I think that getting this circular out will do a lot. And in my opinion, if I'm to give an advice to the authorities,
Yeah.
I would say that they make sure that this rent relief is easily accessible to taxpayers. Yes, they would want to ask, what would they do in terms of abuse? Because trust Nigerians would want to abuse it. Olamide has said one particular entity that he knows has provided 500,000 for all the employees. We can't say it's impossible because this in Lagos State, am I right?
Yeah.
Rent in Lagos is not cheap. For anybody to get 500,000 naira, it means you're living in a apartment where you pay 2.5 million naira
Okay.
as rent, right? An average two-bedroom flat in very good environment goes about that rate. So it's very valid. So these are very, 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 very important questions. But one other thing I want us to look at again is VAT filing.
Yeah.
And VAT filing in the area of attribution.
Okay.
It's not clear, right? Because while it's not going to be so much of a pain to the taxpayers, right? If it's not properly managed or it's not properly done from the start, it would, I mean, it could bring back the noise that we had when the laws were still a bill,
Yeah.
where state governments were really fighting about it and all of that. I'm not sure even in the tax promax portal as we speak today, if it has been updated whereby I can now submit my VAT forms to actually account for those attributions. So a lot I feel is still at stake. I mean,
So I feel like only taxpayer will also bear the burden to some extent.
uh,
Because the law says that if you fail to comply with the VAT attribution, the penalty is 1 million naira.
true,
But at the same
true.
time, it requires the tax authority to release a guideline
Yeah.
say, in a prescribed form, right? But at the moment, there's no prescribed form. So these are some of the issues. In fact, we are already at 28 today. Right? So
Yeah.
which means that by next
Next
week
week.
now,
By next
some
week, yeah,
clients
some
are
people will start
want to
filing.
file their accounts. Yeah, so that's the key.
So the attribution thing, I agree with Toby. The consequences are could be very serious. It could lead to, I don't want to say uprising, but it could lead to a kind of noise and tension that you do not want, because this hits directly at the revenue of state governments.
Yeah,
If you do not prescribe as you've mandated in the act, because I understand that part of the conversation, part of the compromise that we had reached with the stakeholders was that, see, we're going to do this attribution right. We're going to prescribe a form, or we're going to prescribe a way of ensuring that contribution is done rightly and that revenue or VAT revenue is attributed or allocated to the state where consumption happened. So if you do not do this, well, Lagos is the manufacturing hub, is the economic hub, is the biggest center. You may end up having the mistake we've had in the past continue. Now in a bigger scale.
Yeah.
Because remember that before now derivation was 20% in the sharing formula, but now it's 30%. So 30% lost
mm,
on states just because the tax authority has not come up with a guideline for attribution. For me, that should be top priority
I agree.
for tax authority as we speak today. And maybe this helps us because we cannot get everything right in the
Yeah.
but when we make laws, we should ensure that if there are clarifications that should have happened before the laws are effective, that these guidelines and circulars are pushed out, because it is not enough to push the circulars today. You also need to have sessions, sensitization sessions. This is
Yes.
circular, this is a template, this is what it means. Are you going to have all of this before VAT filing is done? Are you
Mm,
going to have all of this before people file their CIT returns? Are you going to have all of this before people prepare their PAYE computation at the end of the month? So it's a lapse that we need to correct.
yeah,
Yeah.
yeah. It is. It is actually, and I mean, all of these conversations are very, 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 very valid. Um, I'm happy we're able to have this kind of discussions because it just means that not only are we ready for the tax laws, right? We want to implement and implement right. We want to ensure that a lot of things are done properly. Because even for us as tax consultants, we have several questions being asked us by our clients that we have pushed them to the point, oh, we let's hold on when the circular comes out, let's hold on when the circular comes out. And now the law has now started, you know. Last year we were all January has come now. Now January is about to end. We are still saying when the circular comes out. I mean, it's just causing a lot of headache for us. But I hope that the relevant ears are listening to us right now.
Yeah.
Right. So as it is now, I think that's all for now. Let's
Okay, thank you everyone to our viewers. I'm sure it's been an insightful session.
Yeah.
I'm sure you've learned so many things, particularly relating to some of the unclear areas that we just try to provide our opinions. And I believe that once the relevant tax authority issues the circular, we'll be able to see clearly where the Gavel falls.
Okay.
Another most important thing is this. Compliance keeps going since we're already in implementation. We might not have to wait or suspend compliance because it's key. So one thing, a key takeaway from here is apply the provisions that are clearly understood by you.
Mm,
Those that are not clearly understood, it might be nice to just pause in order not to be caught on the wrong side of the law.
Yeah.
I think that would just be an advice. Like Peter said, he mentioned that maybe not to even apply some of those provisions. But where you are convinced that they are clear, no confusion, go ahead and apply. But where there are no clarity, like some of those instances we've cited in the course of this conversation, I think it's advisable that you just pause and go ahead and just apply fairly. By the time you get clarity, you could actually come back and do the needful. Thank you for listening and having the time to join us. See you some other time.
Thank you.
Thank you.